Hello friends, welcome back to my channel. Please like, subscribe and also press the bell icon. So today's video is about IDFC First Bank. So after the quarter three result, let's analyze what has happened, what to do with the stock, what are the positives and negatives. As always, I'm not a SEBI registered financial advisor. Please consider this video as a educational purpose video. Let's quickly start. Let's start with the negatives. So as always, I think the bank is struggling with the profitability. It was started growing the profits. As you can see here, it was having a 2,400 crores profit in financial year 23, and 24 it was having 2,957. So because of the one or the other pain, in the 9 months this year, the profit has come down to 1,221 crores. So there was one toll issue. There is also, apart from this, there is also one microfinance industry pain. I think even though this pain is there all across the industry, but somehow once one or the other pain, when the bank started that time onwards, COVID came and this profitability has become like a mystery to this bank. So the pain is continuing. So those who are holding the shares from last 5 years, I think they are just sitting on the rope. Nothing has happened. I think this is the one negativity, and also because of the merger, I think the uh, promoter holding shares has been distributed now to other people like FIs, DIs, as well as the public shareholding has been increased now, starting from last quarter. Even though there were advantages like a bank got some 600 crores cash, as well as now I think there is also some 16 crores shares have been decreased because of the reverse merger. And but even though the shareholding pattern has been now fully distributed, so if it is with more public holders, means I can understand, they will do not have patience. Just to give an example, I think Ashish, the one is holding IDFC Limited almost like 6 7 years. So if there are kind of these kind of big persons comes, they will have a patience to hold. Otherwise, public shareholders means they will be jumping here and there like frogs. I think this is also another negativity why the share prices is keep on coming down. Apart from these, I think, as I said, provisions it keep on increasing. One or the other pain is there. So currently, if you see, I think MFI pain has started actually to the bank. So here, as you can see, I think the SME 1 and SME 2, I think this is the number of days where it's going to the NPA. This has increased. This is actually, as you can see, March, June, September, December 2024. This pain has gone up. So I think this is in the overall industrial pain. But I think as bank is saying, others are really good. I think other book is doing good. Yeah, we have to believe on the bank. I think if the one pain started, it can also go to others as well, like credit card and other retail consumer durable loans as well. But however, bank is very much confident that because they are managing this bank loans from almost like 15 years from the capital first rate, they are very confident. They are saying that I think this pain will not go to other kind of loans, as you can see. But however, I think MFI business, this is going to peak out in quarter four. That means the pain is there as well in this quarter, which will be declared in the month of April. But it will also taper off from there. That means this can also have an impact in the next quarter as well. I think overall, I think they also reduced the microfinance exposure now. I think earlier it was 7% or something. Now it has become 4%, and they are also targeting to bring it down to 2%. But however, I think another good news is also they started insuring with these government authorities. That's why I think this pain will definitely go away. I think in 2 years time. But another advantage is with this MFI is there is also rule or the rule from SEBI or RBI to give the loans to these underprivileged people. It is mandatory. That is one reason, and also the margin what they have got is almost like 24% to 28% they're lending. This also increase the profitability. I think because of these two reasons, they will definitely they cannot get rid of the whole microfinance industry paying. I mean loans, but they will keep on giving. These are the two advantages what they will get. And another thing is also this high cost to income ratio. I think this is not coming down at all, even though there is an improvement. They've also given the breakup between different loans, credit cards, as you can see here. Credit cards also, I think, coming down. That's a good news. Even though I think the overall, the loan book itself is very less, but I think because of the lending percentage, I think there will be good profitability in the credit card business. I think retail also is still not come down, and this is the assets. I think this has come down, but overall the bank is saying I think they will come below 65% by financial year 27. I think this happens, then this will increase the profitability. I think this is also one of the negativity. I think the cost to income ratio is not coming down. So I think another good news or the bad news, I don't know. We recall, I think they have recruited lot many people. I think now it is almost like 41,000 employees. I think that is also making almost like 30% of the overall cost. I think this is also one of the, if they're recruiting more people, they have to, this will anyway cost increases. Of course, I think they are keep on telling that the operating leverage will come, but this has become, like waiting like that. I think profitability has not increased. Another thing is also, the overall market sentiment is also bad now because of the FIS selling. I think they have sold almost like, uh, I think 1.52 times of the amount what they sold during COVID time. I think that's one thing. Another also, Trump has come now. I think uh, imposing tariff on so many countries. I think there is also fear that the tariff war can also start with India as well. So as you can see here, I think the in the month of September or October, I think it had reached till 86,000, almost like 85,978 Sensex. From there it keep on falling down. I think that's also another sentiment why the share has come down. FIS are keep on selling. So because of these, I think these are all the negatives what I can think of. If we come to the positives, of course, I think there are good things happening. I think other banks are struggling to get the deposits. I think this bank somehow is able to get very good deposits. Kasha ratio is also good. I think if you see now, overall, I think they have got a good deposit of 2.27 lakh crores, and also it has grown by 28%. This is good thing happened last quarter as well. I think they are also consistently growing. As you can see, they have grown by 36% of the overall customer deposit. This is kind of a cheap money, of what they are going to get it. So in spite of having their legacy high cost borrowings, which is almost like 8.6 or something, now the cost of funds, total fund is come down to 6.48. This is good. And I think I also mentioned in my earlier video of this Jeffrey's five key points, in that also I mentioned. So they are also not, giving so much of interest rate, but they are also, giving less competitive rates only compared to others. I think as I also mentioned before, I think the high cost borrowings, which are 8.81%, they are keep on coming down. I think in couple of years this will totally come down. You can see quarter four. I think this quarter they are going to pay 1,855, and next year it will be 4,500, and behind that it's only negligible 326 crores. And another positive thing is the diversified loan book. I think we don't need to worry that there will be one sector if it goes here and there. I think overall I think it is well diversified as of now, compared to earlier. It was mainly corporate and infrastructure loans. I think now it has been really good diversified loan book. We don't need to get scared. And also I think almost like 80% of the loan book is in retail. That's also one good thing that has got more margins actually. As bank is always keep on saying, even from the capital first days, I think their GNP and NPA is always lesser. This is also excluding the MFI. This is also really good thing, even though the loan book is growing almost like 22% each quarter. So their NPA is at actually um, less than 2, and NNPA is less than 1, of course. So because of these, I think we can understand that this is kind of a going to be a, universal bank. And if they are, take care of the profit part, and definitely this can uh, become a good investment over a period of time. But the wait is keep on continuing. Another thing, good thing about Good thing are the negativity is also there, keep on diluting the shares. Earlier when the merger happened with capital first, it was almost like 500 crores or something. Now the share overall number of outstanding shares has already become 720 crores or something. That is too much dilution happened at that to a lower price. I think some of the fundraise were at good price. I think when the uh, book value was at 50 or something, the GQG and all invested at 95. I think these were all very good fundraise. I think this will also increase the fundraise, but I think the dilution is happening, and because of the less profit, the earnings per share is not happening. So that's also one reason I think this bank is keep on struggling. So another thing is, number one app in India. As you can see, I think these many users are there, and also there is a good rating actually as well in both Google as well as Apple Store. I think why do you need this as an investor? I think this is also important. You can also think of if you want to invest it for a long term, you can also have the eye on how the bank is performing. Apart from this also there, digital capabilities is also really good. Even though they keep on increasing the customers, their number of calls are keep on reducing compared to 23 within 1 year. I think the number of calls have reduced, and also they are attending the call within less than 1 second. I think this is also very good thing actually. uh, so profitability, I think uh, pre-provisional profit is keep on increasing. As you can see, financial year 24, they had actually 6,030, uh, 6,000 crores profit. You can see their outstanding shares is almost like 720. If you divide this one, I think we should not divide it. Of course, you need to reduce the provisions and other things. But why I'm saying this is, if the provisions part is taken care, I think in couple of quarters, I think they are saying, and I think then the real profit should increase. Even if you give thousand thousand per quarter as well, the provision if you keep, even if they keep 4,000 profit. I mean, this is also growing. Of course, this has grown to 24,000 in 9 months. So this is also one good thing. What is happening actually? Core pre-provision profit is it keep on increasing, and fee income and other things also increasing. These are all the positives. Uh, Excluding, yeah, as I said, I think this is also growing. As you can see, 32% it is grown, excluding MFI loan book. This is also positive news. And apart from that, the revenue growth is happening. As you can see, when the bank merger happened, I think that was 9,000. So you can see now, I think the revenue or the sales is almost like 35,000 crores. So this is just a matter of time. And even if you see here, it is keep on growing 20%. Even the bank also said that they're going to keep on growing the loan book at 20%. If they are able to, tackle this uh, cost to income ratio as well as the profitability, of course, cost and other things will lead to profitability part only. If they are able to take care of the earnings per share consistently, I think this is going to be a good bank, I think. So apart from these, they also said actually, just I wanted to also bring that same slide which was there earlier. So as you can see here, if you see this total cost, so they keep on reducing. It was 33%, and last quarter it was 17, and now this quarter it will become 16%. I think this is what they're saying. So the cost is keep on coming down, but the funded assets and the deposits are keep on growing. I think this leverage what they're talking about is playing now. I think this one, if they're reducing the cost, I think that will also improve the profitability. So if the MFI pain goes away in a couple of quarters, I think at least we can see some improvement there. Another good news is also RBI has cut the rate now from 6.5% to 6.25%. So compared to other banks, I think the fixed rate loan is really good. I mean, the borrowers would have bought at fixed rate, let's say 13% or 14% if they would have bought it. Because of this RPA rate cut, it will benefit for bank. For the consumer, it will not be a benefit. I think this is one of the good benefit. So this is, I think, compared to other bank, this is really good in terms of that. There was also an article in actually CNBC. You can search. I think last week there was an article. You can search with the news. So here also they mentioned. I think who has got the fixed rate uh, loans. I think Bandhan Bank is the good beneficiary out of these. And apart from that, AU Small Finance Bank and IDFC First Bank, they are really good. I think they're going to get the maximum winners of the benefits they'll get it. I think by any case, if RBI reduces further, I think this will always help the bank. That's also another good news. What is the future valuation and the target price? I think as I showed you in the preview, one of the slide, there was also book value was mentioned somewhere. Let me quickly go there. The book value is currently, I think, 51 or something. It was, anyway, it doesn't matter. So the you know the this book value currently, I think financial year, it can reach 55 or it can end up at 53 or 54 because of the the profit did not come in last 2 quarters because of the MFF pain. Even if you say 53 as well, 53 into 2, I think it should definitely get 2 times book value compared to other banks. So it should become 106. That is the right price. Currently, this is really undervalued. I think they are also predicting. I think this is also slide from the Jeffrey's report. So they're predicting, I think, next year of 61. Let's see how it goes. Even if it goes to 60 into 2, if it do 120, if it by any chance if it gets 3 rating, if the profitability increases, then it should minimum price should be 150. Still it is undervalued, but I think the struggle is continuing. I don't know, you need to decide yourself what to do. If you entered at low price, I think this is also not right time to sell because of the overall market sentiment as well negative. I think I would recommend you to hold it actually, if you are holding it from low level. And if you don't have it, I think you can also think of, there are also other banks who have got already good ROA, ROE and other things. You can also invest them because you will get so many attractive companies as of now because the market is fully down. Instead of coming to this bank, you can also think of investing in other shares as well. So these are all some of the targets which have been given for 1 year. I think after the quarter 3 results, I think these are all latest recommendations. Just I put it here. So they are actually recommending like 75 by BOB. Axis is saying 64. This is anyway only 6.82, and there is also this Motilal Oswal is saying 70. So I think to conclude, I think there are negatives of profitability and MFI pain, which is continuing. If you, because of the 65% cost to income ratio, what bank is saying by financial year 27, as well as we can also see that the cost is reducing in so many things the bank is showing. I think if you are holding from low levels, I would recommend you to keep continue holding it at least till financial year 27, another 2 years. So bank is also growing the loan book. I think overall the customer deposits and other things is good. I think even the fixed rate loan is also good. I think these are all the positives. Yeah, you can decide because as I said, I'm not a SEBI registered financial advisor. Thanks for now. Bye.